What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research, so you don't have to. Shout out to 11 Labs for making every video possible with their next-gen voice cloning and text-to-speech tools. Link in the description and profile. Let's dive in. To massive news shaking up the stock market. The latest Consumer Price Index, or CPI report, just dropped, and it came in hot. This morning's data shows that inflation across the country rose to a 4.2% annual rate for May. That marks the third month in a row where inflation has accelerated, pushing prices to a 3-year high. The main culprit behind this surge is the ongoing energy shock from the conflict with Iran, which has sent power and fuel costs through the roof. We need to look at how this hot report will shift the market and affect your portfolio today. Let us look closer at the numbers to see where the pressure is building. While headline inflation is sitting at that hot 4.2% rate, energy costs have exploded, jumping 23.5% over the last year. Gasoline alone has skyrocketed over 40%, putting a massive squeeze on household budgets. On top of that, real hourly earnings have dropped by 0.7%, meaning prices are rising faster than paychecks. Core CPI, which leaves out volatile food and energy, only rose 0.2% for the month, matching expectations. This tiny silver lining is why stock futures scrambled to claw back early losses. Shifting over to the charts, today's hot data is creating an intense technical battleground. Following the pre-market release, the S&P 500 is testing critical near-term support lines around 7,450, while the tech-heavy Nasdaq is battling to hold on to its historic 30,000 level. The price action showed an immediate knee-jerk reaction from sellers, pushing the market down toward its short-term moving average. However, because the core inflation numbers did not catch Wall Street by surprise, buyers are stepping back in to defend these massive technical levels. The overall daily trend remains up, but the market is showing heavy turbulence as institutional desks adjust their models for sticky inflation. When we isolate the momentum indicators on the major indices, we can see the exact story playing out today. The 14-day RSI on the S&P 500 and the Nasdaq had been sitting close to 70, meaning the market was running hot before this report dropped. Today's pullback has successfully cooled the RSI back down into a healthier neutral zone. Meanwhile, the price action is currently bouncing off the middle rail of its Bollinger Bands, attempting to establish a short-term floor. Looking at the MACD tool, short-term momentum lines are flattening. The MACD histogram bars have turned slightly red, confirming that short-term buyers have lost their aggressive momentum for now. Let us map out the most important price boundaries you need to watch right now. For the S&P 500, immediate overhead technical resistance sits right at 7,570. If buyers can push through the panic and force a daily close above that level, it proves that the bull market is ignoring interest rate risks. On the flip side, if selling pressure picks back up, your primary safety floor is resting firmly at 7,350. For the Nasdaq, 30,200 is your immediate ceiling, while 28,567 is your major line in the sand support. We have to be honest about the macro risks here, because this hot inflation report changes the entire game for interest rates. Investors were hoping for a nice interest rate cut from the Federal Reserve this summer. Now, because inflation has accelerated for 3 straight months to a 3-year high, Wall Street is whispering about a possible interest rate hike in July. Higher rates are a heavy anchor for stock valuations because they increase borrowing costs and squeeze profit margins. Growth stocks and tech names are especially vulnerable to this shift, meaning you should expect erratic swings today. From a strategic standpoint, today's hot report means you need to stay disciplined and avoid chasing the morning volatility. The economic story shows that inflation is sticky, but the fact that core inflation matched estimates means the sky is not falling. The smart move here is to let the initial morning wildness settle down, monitor how key support levels hold up on the charts, and watch if the MACD histogram starts to shrink later in the day. Keep your position sizing small, focus on companies with strong cash flow that can handle higher energy costs, and manage your risks carefully. Remember, I'm not a financial advisor and this is not financial advice. Always do your own research before investing. If you found value in today's video, hit that like button, subscribe, and share it with someone who's just beginning their investing journey. This is Sat with Stocks by Sat06. No face, just facts, in 5. Keep learning, keep investing, keep building. Peace.